Welcome back to another episode. I'm your host, Ryan Richards, a residential loan officer and real estate investor based out of Massachusetts and Rhode Island. Today I'm bringing a solo episode targeted at real estate investors, flippers, entrepreneurs who are doing business themselves and might be looking to purchase a new home but can't figure out how to get financing. It's a challenge oftentimes entrepreneurs and especially real estate investors run into. How am I going to get a loan to buy my house from the bank if my income fluctuates so much? I've only been doing it for 2 years, and naturally in the real estate business, there's usually not a lot of net income for tax purposes left over. So what do you do? Well, stay tuned. I'm going to show you some tips and tricks to get financing on your next project. So as real estate investors, entrepreneurs, there's often that challenge of you own a business, you know you do well, you make great income, but your tax returns don't show it. Maybe it's just genuinely a function of the accounting metrics you're using or how your business is structured or operated, but sometimes there's not a lot of net income on tax returns. So how do we get loans to people like that? I'm doing loans right now for a real estate flipper, I'm doing a loan for a business owner, and a few people who own real estate, and most of their income is derived just from real estate. How do they get financing? Well, there's really, I'd say, two options that we look at from the lending side to give those types of people financing. And it's a product that my team and I are really starting to specialize in, that niche, non-traditional lending. Within that, there's really, I'd say, again, two main types of programs we look at. You have your bank statement loans, and you have profit and loss based lending. Different for different types of people. And of course, the terms and down payment structures, LTVs, all change based on the programs we're looking at. But what we can actually do is take your bank statements, under the bank statement example, over the past 12 or 24 months. We even have some programs that will do a 3-month snapshot of your deposits and basically get a sense for how much money you're actually putting in your bank account that we can consider as income for you. And then depending on the nature of your business, we're going to account for an expense factor based on your business structure, your operations, your overhead, to give us a number that we can use for income. But here's an example. I have a client right now on his tax returns it was a negative. He was net loss on his returns over $100,000. Obviously for tax purposes, that's great. For qualifying for a mortgage, traditionally, pretty difficult. But we're able to actually extrapolate the bank statements from his business for the last 12 months. And I was able to give credit for over $180,000 in usable income to purchase a property. So went from potential denial at another bank to we have a solution that can get him into the property, into the house he's looking for, and give him funding. All just a matter of having the right programs, talking to the right people. Not every company does these programs. Not every loan officer does these programs or knows enough to actually execute them properly. So if you're struggling with bank financing and you're a flipper, real estate owner, investor, developer, whatever the case may be, we have some products like that can help you. The second product we look at is a profit and loss based loan. Now there's different reasons why you would use one or the other. Profit and loss is essentially, we're going to get a profit and loss statement from you, prepared by your CPA, that shows the income you've earned over the past 12 months or 24 months, including your expenses, your overhead, salaries, all that stuff obviously is included on the profit and loss for us. And we're able to use the net income figure based on the profit and loss statement. So rather than traditional lending being stuck to only focusing on income received on a tax return in a tax year, traditional lending doesn't let you use, for example, today's June 12th. If I were to underwrite someone traditionally for financing, I'm looking at their 2024 tax return and their 2023 tax return. So if you're crushing it in the beginning of the year, normal lenders don't look at that, right? It's always the thing where it can't help you, but it can kill you. If your income's down significantly this year, that's going to hurt you. If it's up, we don't really consider it until you have it on a tax return. But this type of product allows us to bring in that year-to-date income to help boost the numbers, boost what you can qualify for. So that's a great option as well if you're someone who usually need a more consistent income to use a profit and loss statement loan. There's some other analyses that we do to confirm it's consistent and on trend. But that's another program we can look at. If you're a subcontractor, so let's say you're someone who is in the trades or you're a freelance type business. If you're getting 1099s, we can actually lend on the 1099 income itself, meaning we don't look at the tax returns. Again, there's expense factors that we include to incorporate in our allowable income. But I actually had a real estate agent who was looking for financing. They've been in the business for 3 years. First 2 years were kind of a startup. Last year was great. Traditional guidelines would say we're going to average the net income on the tax returns over 2023 and 2024 if it's increasing. So obviously when the first 2 years are startups, that income is really low. When you average it with a banner year, it dilutes the numbers significantly, especially when it's net income based off of the expenses on your Schedule C of your tax return. So in this case, I was able to basically take the 1099s they received from their employer, use them almost at face value for just 1 year to significantly boost the income that they were able to pull for the application and actually get them in the house that they closed on. Other banks were telling them we can't do it. You don't have enough money. Wait till next year to buy a house. We have the products and the programs to do it. So needless to say, if you're running into issues with financing, don't be afraid to call another lender, hint, hint. I'm obviously happy to help, but call another lender because that's the reason why we started doing this niche lending more and more is because we have the products, we have the know-how, and now we have the experience and knowledge to execute on them, and it's a missing void in the industry. There's not a lot of companies that do them, and there's definitely not a lot of companies who do them well and efficiently. So if you're running into issues with financing, you're 1099, you're a contractor, you're a freelancer, you're in the trades, whatever the case may be, real estate investor, flipper, developer, entrepreneur, business owner, we've got some options that we're happy to show you. Don't let your bank tell you no before I tell you no is always my example. But there's always different products you can look at, different programs, different ways to fund things. Hopefully you found these two helpful for you. So if you need me, if you have questions, reach out, DM, you know where to find me, and we'll see you on the next one.